3 reasons why you should not sell cash secured put options will be discussed in this video. Ladies, gentlemen, binary, non-binary, all the proper pronouns nowadays. My name is Brent over here at ihavesuccess.com, a website dedicated to informing the world that if you have an internet connection, you have a bank account, and you spend money at least once a year, then hey, you know what? I will be the bearer of bad news. You have no legitimate reason not to be selling cash secured put options on stocks you'd be happy to own if you have these 3 things. But this video is about 3 reasons why you shouldn't be selling cash secured put options, right? So we'll have to dive into this hypocrisy. But at the 1 minute mark, a video is going to be popping up right here. Get ready for it. Here it comes. Boom! I put it at the 1 minute mark so you don't have to watch it right now. You can remember 1. It's the number that comes after 0 and before 2. It's easy for you to remember. The 1 minute mark, go back and watch this video. It's the unfair advantages of selling cash secured put options. But this video is about letting you know some people, this might not be the right strategy for some people. And you see what we got going on here, right? Just on the DL for certain people that know what's up. Now, some people, they shouldn't be selling cash secured put options. So I'm just going to give you the harsh reality first. And the one reason why I'm going to give it to you is because it's getting harder and harder in the United States society nowadays to actually get just the cold, hard facts. Everybody's concerned about their feelings. They're concerned about safe places and things like this. So trigger warning ahead. This is not a safe place video. So flee the premises now. Here's the reality. The number 1 reason why you should not be selling cash secured put options on stocks you'd be happy to own is that you're a complainer. That's right, ladies and gentlemen, and everybody else, I said it. If you are a complainer, that's the first reason not to be selling cash secured put options, right? Because no matter what strategy you do, no matter what strategy you don't do, you're going to be complaining. And I myself, I don't want to hear your complaints. And I've never met anyone that enjoyed hearing people complain. And if you're selling cash secured put options and you're naturally a complainer, you're going to find something to complain about. You're going to complain about, well, this sucks because, the QQQ, in order to sell a cash secured put option on the Qs, I need to have too much money in my account. And how much money would you need to sell cash secured put options on the Qs? Well, this is what you do. You pop out your handy dandy calculator. Whether you want to use a Abacus calculator, whether you want to use a phone, whether you want to use Texas Instruments, it really doesn't matter. You can do this math on paper if you know how to do that. I think maybe a lot of people don't know how to do math anymore. I have no idea. So what you do is you look at basically where the stock price is trading, right? So the Qs closed at $325.14 today, and let's say so you're going to be spending, or to cash secure your position. Let's say you potentially looking at selling at the 300 strike price. What does that look like? You go over to the trade tab. Now you see we have the Qs here. This is what's known as an option chain. Actually, option chain will be here, and we can select different expiration dates. Right? You see the dates right here, and these numbers in parentheses. These are how many days are left to expiration. I look at these numbers, how many days left to expiration, more than I look at the calendar date. But you do what suits you. And if you're a complainer, don't do this. So let's just take a look at shorter term option. Let's say for about 2 weeks right here. Just randomly take a look. Look at this. At the $300 strike price, you could potentially make somewhere between 26 to 30 bucks, at least the show today. The highest this contract traded for was 45, the lowest for 29. So let's say it's probably safe to say you can make about 30 bucks. All right? Give me some wiggle room on fees, commissions, but we're looking at a spread here of 45 cents to 29 cents. And here's where you need a calculator. That's times 100 shares. when you're dealing with options, you're dealing in the stock market, you're dealing with increments of 100. So if you're going to sell the Q's $300 strike price, you're basically, for each contract, you're saying, I'm legally obligating myself to buy 100 shares of the Q's at $300 per share. So to secure this, to have this be a cash secured position, you would need $30,000 in your account. Did you see how I did that math? It's pretty easy. Whatever strike price you're looking at, times 100. That's how much money you need to secure that position. That's why it's called cash secured. And what happens is that if basically at the end of 14 days, if the Q's is above 300, then this contract expires worthless and you keep your about $30. If at the end of 14 days, if this contract does not expire worthless, then you would keep your $30 and you would buy 100 shares for $300 per share. But if you don't have that $30,000 to do it, then you're not cash secured. So sometimes people will complain about that. Hey, if you're a complainer, then don't do it. Another reason why you should not sell cash secured put options is because you don't have the internet. If you don't have the internet, then it's going to be not impossible, but it's going to be a little more difficult for you to be selling cash secured put options. Basically because you need an internet connection. Now, you could say, now if I was in a situation where I wanted to be selling cash secured put options, but I didn't have an internet connection, I'd find a way to do it. If I had to, I'd go to places to get free Wi-Fi. If that meant I didn't have a computer and I needed to go to the library, or I needed to go to, let's say, the Apple Store, or if they wouldn't let me in the Apple Store, I needed to go to Best Buy, wherever. Anywhere I could get access to a computer and log in to my my brokerage account, which would probably be the web version, right? Probably not the desktop version. But that's what your good buddy Brent would do. But if you don't have an internet connection, I don't know how strong your desire is. If you don't have the internet connection, maybe you shouldn't be doing this trade. The third reason why you should not be selling cash secured put options is that you're already doing some other strategy that's working well for you. Hey, if that's the case, just stick with what's working for you. Other than that, basically the biggest reason, the two big reasons, one is a negative reason. You're a whining complainer. That's one reason why you shouldn't do this, because no matter what you do in life, you're going to be complaining. So I wouldn't want you on team put option, team sold put option, or should we call it team short put? I don't want you on the team. Or now another reason is some people, they're doing other strategies that's working really, really well for them, and then just go with that then. So right now, we'll end this video with looking at, I do have a put option sold here. You see right here, I got 2 contracts sold, quantity 2, and you can see I sold one at both for a strike price of $30. It's on XLF. You see I sold one that were filled the same day, but 2 different times. One of them I got 8 cents for, times 100, so $8. Another one I got 12 cents for, times 100, so $12. So we could average that out. Pretty easy. $12 plus $8 divided by 2. Boom! $10. You can check your math right there. Or you don't even have to do the math. You just know it's right there, the trade price. So what's going on? What's going on is that this is on XLF, which is a financial ETF. And if XLF stays above $30 on expiration date, this is going to expire worthless. Now with American style options, there is some chance that someone might assign me early, which means that even if XLF is above 30 bucks or below 30 bucks, that I might have to buy the shares. So think about it this way. For your contract length, which how many days left do I have? 9 days. For the next 9 days, at any time, I might be called upon to fulfill this obligation. So when you're using American style options, when you sell a put option, you could be assigned any time your contract is open. But generally speaking, the majority of the times, it's going to be at expiration date, which would be right here in the end of 9 days. So let's take a quick look at the charts. This is a 1 year. We're looking at 1 year, each candle representing 1 day. This is a 200-day moving average. And it would appear, let's see, down here at 30. I think there's a pretty low probability of that happening. I can quickly look here and open orders. This is what I got to do. How about I move this over to long stock? There's what I wanted right here. Probability of in the money. So just by looking at the probability of in the money, I've got a little less than 7% chance that this will get assigned. And there's other ways I could try to gather up that information. I'm not going to look at all these charts at one time. I will go through here individually. You can look at moving averages. You can look at the component probability. You can look at different volume profiles. I can look at the weekly chart, look at the monthly chart, and kind of use that to make my decision and those type of things. But I've already done that, and so I'm good, right? I don't feel like I need to do a lot of management because I already made that decision. I'm okay with either outcome. If you don't understand what I mean, watch that video at the 1 minute mark. This is the best thing about, one of the best things, maybe the best thing. What I personally think is the best thing about this particular strategy is you just don't care what happens. You're in a situation where if you get assigned, you're good. If you don't get assigned, you're good. Like as far regarding assignment and the contract expiring worthless, you're okay with either outcome. So that's what's going on with that. Let's also let's take a look at get back over here. Wrong one. So here's XLF. What are we looking at? 15 minutes. That is not what I wanted to see. 15 minutes. This is all. Oh, my apologies. There you go. That's what I thought I was looking at. Okay. So here's XLF. We're looking at a 1 month, 1 day at all these different ETFs. And for this, for these YouTube videos, it's paper trading. I'm just kind of going through these ETFs. Although ETFs, they have their pluses and minuses. And for me and my personal account, I kind of like stocks a little more. Although ETFs can do some ETFs, but regardless, I want to look at XLU. This is one I want to start selling contracts on more in this paper trading account to test out some stuff. All right, so we see overall, quickly see that the 200-day moving average has been moving sideways. So let's take a look at XL. Take a look at XLU. XLU. So flexible grid over here, right? I've got all I have these all unlinked, and I keep this so I can quickly look through here, look at things like general markets. Right, I got some different general markets. You see the overall stock market today is excluding the NASDAQ is kind of overall down, but nonetheless, that's what this on this flexible grid is. And right here, see I got these 12 sectors on a daily chart. Right, so over on this side, this one, you see how all these are red. This one is red there. Drop that down. You can link these with different colors. So if I put a ticker symbol in here, all these will change. But we're going to be looking at XLU. So what I like to do, especially first time, so I'm looking at a 5-minute daily chart, just to get a quick idea of what's happened in the last couple days, but I am going to want to take off. Where is just? I'll take off that after hours. Maybe it's right in front of me, and I don't. I forgot where that's at. Anyways, I thought it was right in here somewhere. So yeah, well, it's taking too long, and we are eating into valuable time. I really thought it was. Yeah. There we go. Okay, thanks for bearing with me on that. So, 5 minute chart, 1 day. It's actually 2 days. It says 1 day here, but we got 1 day right here, 1 day there. So, anyways, so here we are. Let's save that real quick so I don't have to do that later. All right. So, what do I see has gone on? This is a 5 minute chart. All right, let's look at looking at 15-minute chart. We got 3 days here. Kind of looks to be going sideways. Now we're looking at 5 day on the hourly. You say that's up, or you say that's sideways. It depends how you are going to define it. In my opinion, I definitely see, right. It's from the price closing here to the price closing here. It's up a little bit, but it's in this general range still. And 6-month daily, we see lately it's just kind of been going sideways below the 200-day moving average. You could kind of say it's in a range from about right there to 70 to just like the high 60s, right? And it's still kind of going sideways. Looking at the year, we went up, we went down, and we're kind of in the middle of that, which is making this 200-day moving average just kind of move sideways. Now, here's a downward movement, here's an upward movement, and what we're seeing is up and down volatile market. Looking at the 5 years, each candle being a week over the last 5 years, it's up, but it's not up terribly strong. $55 to about up about like $20. Looking at the monthly chart, we see over time definitely down here at 22, almost 70 right now. Take a look at all these moving averages, and we're above most of those. This 50 days slowly starting to curl up, but it's still below the 200-day moving average. So people that are into the death cross, golden cross type of thing, then still below that. Common probability, we're not going to use that right at the moment. Take a quick look. Ooh, look at this. Right on the volume profile. Man, looking at the weekly, 1 year daily chart on the volume profile, we're right in here. So take a look a little more on the weekly. Wouldn't be surprised if it fell down back to this area. Looks like it's based on this. If it starts getting up here, it's probably going to start pulling back down here. And looking at here, I want to be surprised to see it stay kind of in this range. So now it's getting closer to decision-making time. Let's look at kind of a short-term option here. Now, liquidity, not that great. Right, it's not a whole lot of liquidity. We're still going to try it out anyways. Back over here. Let's see. What's this? The 26th of May. So down here, I'll put this, okay, now I'm on the 26th. And the Kona probability is telling me at expiration date on this one standard deviation, or however it's done, that it could come down here and touch this 66. 66. And look at that big spread, right? 5 cents, 33 cents. Highest it traded for today was $19. Now, usually the first time I'll sell a put option on something, cash secured put option, I'll be a little conservative on it. Okay, so let's go back to, take a look at this real quick. 50-day moving average is down here. And 67. Let's take a look at 67. 67, based on the delta, we've got about a 19% chance of getting the sign. 100, 103 in the open interest, 44 traded today. It's a bit of a better, tighter spread, but it's still not. It's still got some slippage going on there. Let's just go with that one. And before I go with that charts, let's look back here at daily 1 year, 67 bucks. So right in here. I'd really have to break through this 68 support resistance area, which from what I can tell looking at over the last year on the daily is pretty strong. The 68, and it's probably right in there. Yeah, so let's just go for it before I end up taking any longer doing this video. So the way we're doing this is the bid and the ask. You're going to sell the bid, you buy the ask. If you can't remember that, if it's kind of confusing, which you can totally understand that it is a bit confusing. So you can just look at the higher number and the lower number. When you're selling, it's going to be the lower number. When you're buying, it's going to be the higher number. So I just click on the one I want to do, and then it automatically propagates this. But what if I were to click on this one? Right now I'm in a position that if I send this order in, I'm going to be buying the option versus selling the option, which is no big deal. I just go over here, bring that down to the negative. I'm going to change this over from day to good till cancel. And also see the price right here. 67 right here, right? And then this mid is basically between these two numbers. So let's just pull it over to the mid. Goes over telling me what it is I'm going to do. What are my break evens? What's the max profit? What's the max loss? Why is the max loss so big? Because this is assuming that if I take ownership of the stock and the stock goes to zero. With an ETF, it's depending on which ETF, but with a strategically chosen ETF, the probability of it going to zero is pretty low because the ETF is made up of individual companies. It doesn't mean an ETF couldn't go bankrupt or something, but you're limiting, in a way, you're limiting the risk of a company going to zero. Now, if you do a good job of picking a company's probably not going to go to zero. Like Johnson & Johnson's been around 100 years. It's still going. McDonald's been around for a long time. But, then you got things like Enron and Blockbuster. And how about WeWork? Would you want to, I don't know if that became public. But, there's just certain stocks, Neo, or not Neo, Nikola, that you kind of want to try to avoid the frauds. If you don't know how to avoid the frauds, then you can look at ETFs, which have their pluses and minuses to them. If you want to get a better idea of how to pick good stocks, under free stuff or the homepage over here, I've got a YouTube video that will walk you through, giving you a better idea, and some downloads in there. Let's fire this off. One thing, I want to change this over to open orders. This isn't something you have to do. This is something I just personally like doing. And buying power effect. Because I have this, obviously this is a simulated trading account, but in the simulated trading account, we got a lot of cash in there, and we got plenty of free stock buying power and option buying power So this is not a big deal. In fact, I could put on several contracts, but I'm just going to do one for fun. Send this into the market. Now it should be over here, right? I moved this one, right? It got filled. I moved it over here. Waiting to see what's going to happen. Got 9 days left on that. And then this one, we'll see if it gets filled tomorrow. Before we end this video, let's take a quick look at FinViz. All right, we see pulling a little more of the advancers versus the declining, but we still got a majority of stocks making new lows. We also have a slight majority still under the 50-day moving average, and we got almost 60% below the 200-day moving average. We got a mixed color in the heat map here. Any headlines? Okay, look at this. Speaking of ETF, Robinhood to launch 24-hour trading on weekdays in stocks and ETFs. Oh, that could be fun for someone like myself that lives in the Eastern. I don't live in Eastern Standard Time Zone. I live in a Hawaiian Standard Time Zone. Wall Street Cheers latest inflation report. Some see trouble for stocks. This is a sponsored ad. Disney earnings miss. NASDAQ closes 1% higher. Yeah, it's pretty whack. Treasuries advance after CPI. Any ticker symbols you see here for insider trading? Anything grabbing my mind? And because I've been busy with some stuff, let's look at the last week. So overall, looking at the heat map for the last week, we see a lot of stocks down. We see a lot of red. We see a lot of green. If you feel like you're seeing more green than red, look at the size of the box. If everything were evenly sized, will we see more red or more green? And should give you an idea. I think you can call that the breadth of the market. Is the overall stock market moving down, moving up? This although maybe there's a lot of people that would complain on this, but I kind of view this in a way of looking at the breadth of the market. Like, is the majority of the stocks moving up or down? Because then you'll have a few big names like Apple, Meta, and Microsoft that potentially move move the whole indices, right? So you might think sometimes it's a little misleading when you're just looking at like the S&P 500, because the S&P 500 gets weighted by certain stocks. So what's the overall health of the market? Let's see, the dollar's been moving sideways. VIX overall is being pretty volatile. Treasuries still moving down. Gold back above 2,000. Not surprising, but don't be surprised if it gets whacked to the downside. And oil still staying between 70 and 80. Bitcoin futures, it's staying above 26,000, staying above 25,000. So for Bitcoin bulls, I think that should be a good sign. So with that, my friends, you guys have a fantastic day. If you want some personalized help, reach out. We got the free stuff, got the paid stuff. Aloha.